everyone, and thank you for taking the time to come and hear the NORAM Lithium story. My name is Greg McCunn. I'm the CEO at NORAM. I'm relatively new. This is actually my first public speaking engagement with NORAM, so thanks to Red Cloud for having us at this event. We're going to be focusing here on our only asset. It's our 100% owned Zeus lithium project. It's located in Nevada. Zeus is a little bit different than the previous two speakers and the projects that you've seen here this morning. It is a lithium clay deposit. So we're going to be mining, processing, and producing a finished grade, battery grade lithium carbonate on site at Zeus. The reason I joined the company is it's has now moved through its exploration phases. So we'll talk about the phases of exploration and drilling as we go through this presentation, We're now moving into the engineering, the de-risking, the permitting, and ultimately construction of the mine. So I will make some forward-looking statements here today during the presentation. Just first, a little bit about NORAM, the company. We do trade on the Venture Exchange here in Toronto under the ticker NRM. The company was founded and moved through the exploration phases by the management and insider group that currently sit on the board of directors. So as a result, most of those early phases of exploration were funded through close associates and insiders. Management and insiders still own 12% of the capital stock of the company. We did have one major capitalization event last year where Waratah, or the Lithium Royalty Company, which is a spin out of Waratah LRC, invested 17 million Canadian in NORAM. That got them an equity stake of just under 16% of the company, and as well a 1% royalty on Zeus. So at the start of the year, we had most of that 17 million still intact. We were starting with about 14 million. These are Canadian dollars. And we're well funded here this year to carry out our de-risking exercise, which will culminate in a pre-feasibility study towards the end of this year. We expect to spend about half of our treasury, about 7.5 million Canadian, on our program. You see here our market cap, and as we go through this, you'll see we trade at a fraction of our NPV, and I'm talking a very small fraction. I think the reason is NORAM is relatively unknown at this stage. We're just starting to get out and tell the story to institutional investors. Most of the stock here held 70%, over 70% by predominantly retail European investors. So what is Zeus? Zeus, as I mentioned, sits in Nevada. Strategically located. It's about halfway between the cities of Reno and Las Vegas. It's about a 20-kilometer drive off of the main highway between Reno and Las Vegas. The city of Tonopah is the closest small town here. You see in the aerial photo with the overlaying concessions on the right-hand side of this slide, the Zeus concessions are in red. Those green ponds that you see there is actually North America's, I believe, only finished product producing, as opposed to spodumene concentrate producing, lithium mine. It's the Silver Peak mine, which is owned and operated by Albemarle. It's been in production for more than 50 years. You can see by those big ponds that are there, it is a brine operation that traditionally you would see in places like Argentina. So this is a low-sloping valley. The brines collect in the bottom of the valley in the playa. They're pumped up and evaporated and then produce lithium salt, which is dug out and purified. We sit a little higher on the valley, on this more like a bowl of a rim in the sedimentary clays. Zeus is a tremendous deposit, as you'll see in the coming slides, one of the largest lithium sources in North America, in North America. As I mentioned, we have finished the exploration phases of the project. Just under 5,000 meters of drilling has been done here over 6 phases. Last year, phase 6 was predominantly directed at converting most of the inferred resources into measured and indicated, and we'll talk to that slide in a minute. There was a PEA that was done prior to phase 6 of exploration. It was done about a year ago. The highlights are here on this slide. What we were focusing on is, again here, a processing facility producing battery-grade lithium carbonate, about 32,000 tons per year of lithium carbonate. If this mine were in operation in 2022, that would be 5% of the world's supply. So this is a significant mining operation. We modeled a 40-year mine life here. There's well over 100 years of resources, which you'll see in a minute. anything beyond 40 years just sort of became a bit esoteric. Margins here are tremendous, with operating costs down around $3,400 per ton. That's per ton of LCE, lithium carbonate equivalent. The processing plant here was envisioned to be a 6.2 million ton per year processing facility. That's around 17,000 tons per day. We used a price for these economics here of a long-term price for lithium carbonate of just over $14,000 a ton. Of course, spot prices today are about 5 times that, trading around $60,000 per ton. So even at long-term prices, tremendous margins driving incredible economics. I've worked in a lot of mining projects in my career. I've never seen one where the NPV is essentially 5 times the capital cost. So the Zeus, as I said, the PEA outlined a tremendous project here. I just will highlight just quickly on the PEA. This is the infrastructure that was outlined in the study over top of our concessions. The purple outline that you see there is the pit. One of the unique things about this deposit and lithium clays in general in this part of Nevada are that they're outcropping essentially right at surface. It's an enormous ore body that's very consistent. You saw in the previous slide, very small amount of drilling required here to outline a resource. That's because it's shallow. That pit you see there, those are 500 meter squares on that graph. The pit is about 1.5 kilometers wide by 4.5 kilometers long, or envisioned to be that size. Very flat bottom on it because it's only 40 years of mine life as opposed to the 100 or so plus years of resource that we have here. So it's only about a 30 meter deep pit in this study. So very shallow, relatively minor disturbance here. Another feature, of course, because of that consistency and because of its proximity to surface, unlike, say, a copper or gold deposit where you'd be mining 4 or 5 tons of waste for every ton of ore, here the strip ratio was estimated at 0.07 tons of waste per ton of ore. So very low mining costs. In fact, really this isn't a mining operation. This is a very simple operation of scraping things up and putting them into the processing plant. So I talked about the resource that we developed late last year. We finished a 6th round of exploration drilling. The main focus of that drilling was to convert inferred resources into measured and indicated. The program was very successful at doing that. The resource that was just published in January of this year, so it's current, is on the left-hand side here. You can see measured and indicated resources of over 1 billion tons. So just do some quick math. We are envisioning a 6.2 million ton a year processing facility. So there's well over 140 years of mine life here in measured and indicated resources, and well over 20 years in measured. So a high degree of confidence in this resource. Our grades here for that entire 100 plus year mine life, averaging around 940 ppm lithium. So if you want to compare that to other deposits, there's a bit of a comparison on the right-hand side here. That is about 5.2 million tons of contained LCE in the measured and indicated resources. We think that makes us the 4th largest contained measured and indicated resource in North America. Of course, Thacker Pass being the biggest, which we'll talk about in some subsequent slides. That's going into construction for Lithium Americas, much further north in Nevada, and is being well financed now by General Motors and the Department of Energy. So lots of 2 of these clay projects, at least Rhyolite Ridge as well, both getting credits, financing, and moving towards construction. We're a little behind that, working on a pre-feasibility study, but one of the main focuses of our work right now is trying to exploit one of the unique features of Zeus. We talked about this huge resource on the previous side, which is all great. What you're looking at here on the left-hand side is this color coding is the resource grades. So the grades from that resource estimate that you just saw overlain on our concession map. The cool yellow and green colors, I know it's too small to read here, those are the lower grades, and the dark purple color in the center of that left-hand graphic is the high-grade core of this deposit. Now, some of you might be familiar with base metals or gold. You're always trying to find the highest grades to put into your processing plant early in the mine life. Sometimes you can get an 18 or 20 month juice to your cash flows, a better return on your invested capital for your investors at the shorter payback period by optimizing those high grades. Here, this high grade core is more than 1 kilometer wide. It's over 3 kilometers long. It's 60 meters thick, which we'll look at in a quick section in a second. So we're talking about over 18 to 20 years of high-grade mine life. So this is a tremendous, not only starter, but it's really the whole project eventually, as far as most of us' lifetimes are concerned. And we'll be looking at right now, a major catalyst we think for the stock is developing this high-grade core and showing what it can do to improve the project economics from what are already excellent. We've engaged SRK out of Reno, who are looking at that right now, and we're expecting to be announcing those results in the coming months. We're going to look quickly at a section through that high-grade core. This is looking northeast. I won't dwell on this too much. Just to highlight here that there's very little amounts of overburden. The left-hand side of this section is the playa. It's basically the high-grade outcropping at surface. The right-hand section maybe has 30 to 40 meters of lower-grade material sitting on top of it at its deepest point. So the idea here being to set aside the low-grade material, process it later in the mine life. Maybe we even increase that strip ratio to 0.2 or 0.3 to 1 instead of effectively 0. And we end up with a tremendous project that we expect to see grades here. We hope to see grades, 40, 50, even maybe double the resource grade. So that would be a significant boost to the project economics and allow us to optimize the size of the plant. So processing, I talked about at the start that we are going to be producing battery-grade lithium carbonate on site here. The clay will be processed right at the mine site. The flow sheet that you see here, this is a simplified version of it. I'm a hydrometallurgist by training. I spent the first 15 years of my career working in base metals predominantly, mostly for tech and zinc and copper refining. Lots of the process steps here are very familiar to me, and I've operated plants that do the same thing. There's effectively 3 stages here, which I'll touch on quickly. The first being to separate out most of the acid-consuming material. The lithium here is very fine. There's no crushing or grinding that's required. We're going to separate out some of the acid-consuming material and separate it from the lithium. The lithium will be leached under atmospheric conditions with sulfuric acid. It'll also dissolve some iron and aluminum. The middle box that you see there is the heart of the process, where we'll be precipitating that iron and aluminum and filtering the tailings. So we'll be dry stacking tailings here. There'll be no wet tailings storage facility. That lithium solution is then purified, removing magnesium and other minor impurities to produce the battery-grade product. That bottom row of the flow sheet is what's commonly done many places in the world in brine operations or in refineries which treat the spodumene concentrates that would be shipped to them. And just quickly on ESG, there are some significant benefits to producing lithium from clays. First and foremost, as we've already seen, a very small environmental footprint here. It's a very shallow pit. There's a small disturbance of the ground. Our neighbors at Albemarle, at Silver Peak, there's tens, in fact hundreds of thousands of acres that are disturbed in evaporation ponds and digging up salts. Here, this will be a fraction of that. The processing plant takes up a space that's not much larger than some of these ballrooms. So a very small footprint. Carbon-wise, there's an advantage here in that there's certainly much lower scope 1 and 2 carbon emissions producing lithium from clays on site in a finished product that doesn't have to be shipped at lower grades around the world for refining. And importantly here, this clay deposit and several of the others that are advanced stages, we're producing our own acid at site from elemental sulfur. The benefit of that is that we will cogenerate power on site. It'll not only feed the entire operation, so we'll be self-sufficient in terms of power, we'll also have a little bit of excess power we believe that we can feed back into the grid, and importantly, that's carbon-free power. And of course, the social benefits, this is important for the state of Nevada, bringing high-paying jobs, a very strategic project for the state and the region. I think lithium clays, there's been some resistance to developing lithium clays, and you've seen most of the focus over the past couple of years go into more onto either spodumene, hard rock mining, which is a much more traditional way of dealing with mining in Canada. It's well known. You're talking crushing, grinding, stripping, shovels, trucks, the usual, and shipping the product off somewhere else to be refined, much like copper or zinc. Lithium clays are starting to get attention. We've seen Thacker Pass, which is Lithium America's project, receive financing from an end user of this product at General Motors, $650 million recently. The Department of Energy has a $16 billion loan program that they're basically funding up to 75% of projects like Zeus with very low cost financing, 9 to 10-year term loans at treasury rates plus 10 basis points. So extremely favorable financing. We've seen Ioneer source that financing for Rhyolite Ridge, a $700 million commitment from the Department of Energy. So I believe the time has come for clays, and we're certainly well positioned to be one of the next projects in the pipeline. I'll just wrap up with a final slide here before I take a couple questions. This is going to be a catalyst-heavy year for the company. We're going to be optimizing the mine plan at Zeus, like we talked about. We're going to be we're carrying out a third phase of metallurgical testing to support the flow sheet that we talked about, and we're going to be rolling this together into a pre-feasibility study, which will be complete before the end of this year. That'll lead us into a parallel permitting and definitive feasibility study in 2024, so that by 2025 we can be well positioned to make a construction decision on the mine and start advancing this into production. So Kobe, maybe I'll just leave a few minutes and stop there for questions. I'm happy to take any from the floor if there are any.